Welcome everyone. Welcome back to Be Rich. I've got Shashwat here with me today. We've always been talking about how the global economy is slowing down and why things are looking rather bleak. A lot of you feel we are screaming unnecessarily what we call danger, danger when there is really no danger, that we're being little like chicken little and we're giving false red flags that everything is not so bad and everything is pretty good. Just a little bit of inflation here and there, but we're okay. We're all right. Is what some of you feel. So I thought we'd actually talk about actual numbers, what's happening now, and the terrible danger the world economy is in, and the implications it has to the broader market and also as us as individual investors. So Shashwat, why don't you start off by what's happening in the East?
Yeah. So the East is basically, China. That's the second biggest economy in the world, and it's been poised for a long time to be able to take over the US in terms of growth. I mean, growth, yes, it's already taken over, but in terms of just aggregate GDP. So China has been sort of teetering on the edge of deflation. And in 2021, they did sort of go into deflation and then they pulled themselves back. That did happen. And what people are wondering now is where is China? What is going to happen with China? But I think it's more important to understand where China is. To understand that, you need to first look at their inflation numbers. So China's CPI or price inflation index inflation has been minus 0.3%. That is, they're now in a deflation territory,
Right.
and they are basically the consumer prices have gone down. That's you might think that yes, okay, prices are going down. That's a good thing, but that's not a good thing. The economic output, at least, is going to go down. Jobs are going to get cut because prices are going down because people are not buying goods, and people are not buying goods. That just means that you're going to have people who are less willing to spend, and if people are less willing to spend, there'll be less money going around in the economy, and you just sort of have this downward spiral which goes on, and this downward spiral will eventually end up it'll eventually lead to you having your entire economy go down the drain, and
True.
that's what China is afraid of. And there are few components in China which has been sort of playing into one another and just driving this ship down altogether. And the major component which has been sort of dragging China down has been the property trouble which they've been having, the commercial property market in China, which has been sort of weighing them down. And this is something which has been happening for about a year and a half now. And China's commercial market property collapse has meant that investor confidence in China has completely diminished, and people don't have money at hand because, like it or not, commercial real estate and residential real estate, this is where a lot of money is parked in terms of investment. And now that money is now going down the drain because of the downward spiral. And China's draconian COVID policies have basically meant that they don't have the ability to just jumpstart the economy as they would have liked to. When they should have been jumpstarting the economy, they clamped it down even more, and now they're paying the price for it. Their producer price inflation is way worse than their consumer price inflation. It's down by 4.4%. And if you look, the interesting thing is if you look at China's core inflation, that is subtracting food and energy, because core inflation says, food and energy are very volatile. It may misrepresent your numbers. Let's look at core inflation, which is subtracting those two from the CPI. That is a minor uptick. There's a point something percent increase in consumer prices, but mainly what has driven down this inflation rate in China has been one, your food prices. So pork, which is consumed enormously in China, has declined by 26%. Pork prices have declined in China by 23%, and this has basically meant that food prices in China have gone down. This may be a good thing in the short run for consumers, but this doesn't really bode well for the economy per se. And that's basically what's happening in China. So, what do you have to say about this?
I agree. It's like let's do weight loss, and the technique is starvation. We'll starve ourselves to weight loss. That doesn't work. The human
Yeah,
body requires nutrition. Same way, the global economy, we all of us look at inflation and say, oh my God, inflation's terrible. China is lucky they don't have inflation. It looks like they have deflation. Things will become cheap in China. Maybe we should all go there to China and buy stuff. Because
Yeah.
the consumers of the world want to consume, and they're like, ha, if Chinese products are becoming cheap in China, that means the exports will become cheaper. It's all cheap, 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 cheap. No, it doesn't work like that. I'm sorry
Doesn't
to
work
say it
like
doesn't work like that because what happens is the Chinese people will suffer. They'll suffer tremendously. And it's not going to get any better anytime soon in China because they have a huge climate catastrophe happening there too. There have been heavy floods in the northern and central regions of China. Huge rice belts of China have been washed away. So they're going to have a food problem, a food shortage, and this is going to be further spiraling this deflation spiral which they'll be into. There'll be an odd skew which will be happening because of sudden shortage of supply of basic necessity goods in China, such as rice and water, clean drinking water, spike certain things to inflate, pushing deflation pressures on other consumer products, which needs to hold up the economy. Because when the Chinese people stop consuming products, these companies, factories will start laying off workers because there's no work for them anymore. And when there's a huge layoff happening within China, the government has to step in and start providing safety nets. All this is really, and you have a population over a billion and spread out completely in a huge landscape like China is. This is a huge problem for them. And there's immense pressure on Xi Jinping and his government to do something because this can very fastly unravel, affecting China as a country itself. And we have seen this in history, repeatedly studied this in history. And we think history never repeats. And of course, history repeats all the time. No empire has lasted since the dawn of time till now. Empires have risen and fallen. Even the great Roman Empire fell, and it's all because of this, because of economic principles. And it is a huge warning sign for the Chinese government. I hope the Chinese leadership is paying close attention to what is happening internally and not worry about right now about Taiwan or America or sending spy balloons across the world to see what is happening. They've got enough mess in their own backyard to sit and focus on. Because without the Chinese people supporting the Chinese government have nothing to stand on. Power looks really impenetrable like a fortress. But if you don't have your foundation, which is your people of the Chinese people suddenly lose faith in their government, things can unravel very fast in China. This is
Yeah.
what I think is going to happen if people are not careful. Across the globe, this is. It's not in China. China is like something you can sit and watch because of the size of their economy. But this is happening in smaller countries all over across Africa. It's happening, and it's happened in Sri Lanka. Throughout a government which was very popular 5 years ago, there was the most popular government. He got rid of LTTE, this, that. I mean, you're singing song. Sri Lankan people are singing praises about him. Children are being named after him. Now the whole family is looked upon as like a curse upon the country. So, it all happened in a very short span of time. So you got to be careful. It's always about the money. It's about the
Yeah.
economy, stupid, as that guy said. This is what's happening in China, and I agree. Let's compare and contrast what's happening in the US. So we say communism is bad, totalitarian government is bad, that capitalism and liberal economy is the way to go. So let's look at the West. What's happening in the Western front? Are things
Well,
nice?
yeah. Well, yeah. This is the second portion, and I guess we'll finally tie it up in a package, nice little with a nice little bow on it. But basically, the U.S. has also been going through its fair share of turmoil, although they've been a little better at sort of disguising it. Well, one because they're the world reserve currency, and secondly,
Correct,
it's the U.S. and the U.S. can do no wrong, of course. And
correct,
the US has had their fair share of trouble with Signature Bank and the two banks, First Republic and Silicon Valley Bank, which collapsed, basically were the harbinger. They were not the only banks which were going through their fair share of trouble. All these other banks have been going through their trouble, but it's always the question of which one is going to fall first. And Silicon Valley Bank and First Republic were first in that line. They were the ones who were the scapegoat and basically made into the whole reason why this collapse has occurred. Although other banks have their problems inherent in it, and it's now coming out. So Silicon Valley Bank basically as a primer collapsed because of their assets being parked in illiquid means. And secondly, illiquid in the sense that they were parked in very low interest rate bonds, but then these low interest rate bonds had to show a
Price
huge
collapse.
markdown. Yeah, they had to
Yeah.
show a huge markdown in their asset value. If they had held it to maturity, then there'd be no problem at all. But
People wanted,
the
people got scared.
yeah, people got scared. It was a classic bank run, and that's not even half the problem. And the most structural problem in the banking sector in the US is that because interest rates are rising, one, credit card defaults have been something which have increased because people have been spending haphazardly on their credit cards because one, you basically had no interest rate which you had to pay, and the only interest rate which you had to pay was if you rolled over your debt, and you wanted
Correct.
to keep rolling over your debt, then there was a cost to that. But then if you were prudent in how you spent, which is what everyone thinks, they think they're very prudent in how they spend. They assume that you had no interest rate which you had to pay, and they kept increasing the amount of their debt. And this is basically what happened with the credit card default, which is now happening in the US. There's a huge epidemic where people are unable to pay back their credit card loans. That's there. Secondly, you also have commercial loans, which have been you have delinquent loans. Delinquent loans is that in the past year, if a borrower has missed a payment, even one payment, then that is considered delinquent loan. And there have been an increase in delinquent loans. There's been an increase in uh, charge-offs, which is charge-offs means that the bank basically says, okay, we're not retrieving this money back. Like they write it off. It's called a write-off. So banks have been writing off. So overall, there's been a $19 billion write-off collectively amongst all these banks. They've all said, okay, we're not getting these loans back, this money back from these loans, so might as well just write them off. And banks have also further provisioned 24 to 25 billion dollars worth of money just in terms of reserve to tackle this increasing epidemic of credit card defaults, commercial property defaults, and basic normal loan defaults as well. So the corporates have been feeling pain, like that big trucking company which went bankrupt. But the corporate story really isn't at the foray of what's happening right now. It's more to do with consumer loans because the recovery after COVID was more of a consumer based recovery than anything. Wages spiraled up and you had people spending more, and banks had a wonderful time, a gala time, if you will, and their net interest margin increased. Banks were showing amazing profits, and that has been everything seemed hunky dory. But now the truth is coming out, and the skeletons in the closet are basically falling out. And to the credit of banks, they've been saying for the past 6 months, the people from Morgan Stanley, Goldman Sachs have been saying, this is not going to last forever. This net interest margin arbitrage we're making is not going to last forever. One, they also said that this benign banking environment is also not going to last, and we should be prepared for rising defaults because this is very artificial because of that stimulus money and extra cash which is sloshing around in the market. Otherwise, this is not something you see on a regular basis. That being said, the US story is now is now unwinding.
Right. And as you rightly said, it's because they have the reserve currency. They can print as many dollars as they want, and people are swallowing dollars. They're able to keep it afloat. But that's when suddenly they got slapped with that downgrade of their thing.
Banks, yeah, yeah,
Yeah, downgrade of the banks, and their U.S. Sovereign bond itself got downgraded, and everyone in the
yeah,
market, and oh no, oh no, you know, oh, it's just start of the party. Problem is for
yeah,
the US, it's such a huge, complex beast of an economy, and it's spread out completely across the globe. You don't realize, where the fault lines are. You don't know where it's going to come. But the problem with rising interest rates is it's like putting a pressure on the heart of the economy. You're choking the heart, and when you start choking the heart, blood circulation starts choking. And when blood
yeah,
circulation starts choking, you do not know which organ required that high dose of blood. Suddenly starts, petering out. You don't realize which organ is going to start failing, so you don't know. And the banking sector has always been troublesome in the US. Historically, if you've been a student of history and that to American history and their banking history, if you've been studying, they've always been rogue operators. You know,
yeah,
when the things are good, they look like, the knight in shining armor. But when things are really peeled back and looked inside, You see they've been doing some crazy things in their banks. The kind of bets they make, the way they think they can take an arbitrage, make some money on the side. And this whole thing went southwards as soon as bank officers and bank owners and board of directors started taking shares. Employees were given share options. Things started going really sideways after that. So I don't know. This I feel is just the tip of the iceberg. Maybe they can again borrow and print some more dollars and get out of this trouble too. But there's only so much you can kick the can down, and their debt
Yes.
is huge. American debt is huge. Is it the time now? Is it the last straw that breaks the camel's back? It's a fantastic analogy where you have a camel fully loaded with so much of goods, and all you have to do is place one small, fine straw on it, and the camel just buckles and collapses. It's like that. You see, it's like massive debt piled on the American back. You do not know the final penny which you put on top. Money pulls everything down. As crazy as it sounds, that's how these empires have fallen. You know, if you
Right.
studied history, the way a small loan, a small bank failed and unraveled a complete empire. I mean, it's a video for another day where we can talk about these empires. But it happened. Even indeed, the way the British East India Company failed was something as similar as this. When the British monarchy took it over and said, "Okay, enough is enough," you know, we nationalized the British East India Company, and it was nationalized. It was actually a private company. Though the
Yeah.
British were here for 300 years, majority of it was we were like a private company. We were owned as a private asset of a company in the UK. Believe it or not, the
Yeah.
entire Indian country was like just an asset. It was like a toy which was played with a British company. The
Yeah.
actual British government took over much later. Of course, it continued. Whatever they did to us continued. But the initial onslaught was held by a private corporate. And it's really funny if you study history, how they took advantage of us. This is what happens with American banks too. You don't realize what they're doing till the government
It's
steps
too
in and
late.
says, "Hey, yeah, hey, what happened?" Then you're like, "Oh my God!" And we've seen this with Lehman Brothers. We saw this with Bear Stearns. So it's nothing new. We never seem to learn from this. As investors, we've always said, "Be cautious, be cautious." Even Warren Buffett has said many times over the last 3, 4 years that debt is unmanageable. American debt is non manageable, and you cannot continue doing this. Yes, he says you bet on the American people. But at the same time, he said this debt is a problem. Until we find a solution, I don't know.
Yeah. Um, so what is the investor takeaway from all of this? I'd say is, keep your money ready because it's going to be a good time for us investors when, the
Keep your war
domino
chest
effect.
ready.
Yeah, the watch is steady. And we did say in the last video that we were looking at HSBC, but I want to update that and say that we think it's prudent if you wait a little longer for better prices to come about because the interest rates are going up. The Chinese property market is blowing up, and HSBC has a great big exposure to the Chinese market. So it'll be very prudent if you wait for more bombs to go off and see the entire domino effect tumble and really investors having a tough time selling these companies and then purchasing the stock rather than
Yes.
heading
Correct.
uh you know
Joshua is
face first.
absolutely right. The tide has just started receding.
Yeah.
Let's wait. Let the tide pull up. There's no
Yeah,
rush.
we've been saying wait for the past 2 years. This is the now you're at the crux, and it's like this period where you're like seesawing and you just have to wait for
Yes.
it to tumble and fall, and you're almost there. You
And
just
don't
have to wait
worry,
a little longer.
and you're going to have a long time to buy. Once this
Yeah.
collapse happens, it's going to take an enormous amount of time and effort to put all of it back in order. It's not going to like collapse and suddenly bounce back the next day. It's like, oh, damn
Yep.
it, I missed it. Once it collapses, it's going to be collapsed for a long time.
Yeah.
So don't worry, opportunity is going to be there enough.
Yes. And yeah, that's pretty much it.
Anyway, thanks for watching us today on Be Rich. I hope this video has been informative and entertaining as always. And if you have any comments or feedback, please do put it down in the comments below. Me and Shashwat do sit and read all of these comments, and we do try and bring them into our videos and do discuss topics of interest to you. That being said, do subscribe to the channel, turn on the bell notification icon so you'll be notified every time we have a new video out. And we'll see you on the next one. Bye.
Thank you.
On 26th August, we are doing an event in Bangalore, Whitefield. Those desirous of meeting me in that event can contact the WhatsApp number or the email given below. My team will give you the details. Thank you. once again for supporting Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.